How do traders? Here we are. It's the 17th of June. We're looking at this trade from last week, FOMC, around about the 10th of June. I've only just gotten around to putting the video again together, but I did explain this trade to you. It was a beautiful trade. We had been anticipating it, and these are the trades that we're taking. What I'm going to do before we go into the details of it, before I put the lipstick on the trade, what I'm going to do is give you a chance to have a look at it, and then I'm going to put the lipstick on the trade. Okay, so give me a second, and I will just do that. 1 second, guys. All right, guys, so here we're back with the trade. Now, let me just say this. I need to say it because I might get myself into trouble. The usual disclaimer: trading carries a high level of risk and may not be suitable for all investors. Before deciding to invest, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some of all of your initial investment, and therefore you should invest money that you can afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Okay, so that being said, let's have a look at this beautiful trade setting up right now. Okay, trade. So let's dig down deep on this trade. Let's see what's going on here. So we put the fib on. Now you see here's the trend line. Okay, trend line broke. Pull back to the 50% fib. Now you can hear the family in the background. It's okay, guys. Listen, it's lockdown. We understand. Here's 50. So there's our first entry. Textbook. We expect it to go down now. Okay. Now what exactly happens? Let's have a look at what happened. There's what we expected, and then we see what actually happened. Price went up here. Now, this is why you document all your trades, right? Why did price go up here? Well, what do we know? This wick above, which comes above the previous highs, because stops would have been at the previous highs. You've seen strategy. We do it all the time. Okay. Often we get the 50% textbook pullback, right? And then we get the drop to target. Here in this situation, we got this wick. Now, some of you know exactly what this wick is called. Okay. And for those of you that don't, newbies and so on, that's a stop run. That's when the market makers are doing a stop run. I'm just going to take this fib off for a minute. That's when the market makers are doing a stop run on price. As you can see, I have here 1.27 stop loss. Okay. So however I fib, that will give me a space above. So as you can see, with that, using that as a stop loss, I would have been saved. I didn't, okay? Let's just go by the strategy. Typically, you're just going to be above the high. Yeah, you're going to go 10, 15 pips above. This wick took you out. It went, oh, look, it went 20 pips. Near enough 20 pips above. And it would have took you out. Let's just go per the strategy. So you lost on that one, okay? So you'd have been in from the 50% fib here, right? You had no time to move to break even, because really break even will be when it gets to the 100, and you went up, and so here you're 73, so about 80 pips and you're tagged out. This day here was FOMC, and I did tell you guys, right? Be careful, it's FOMC. If you weren't listening, you stayed in the trade for whatever reason, here you are, FOMC tagged you out. But look what happened thereafter. We got another trend line break, right? In my humble opinion, price, right? Price was already, and this is just my humble opinion, by the way, this was meant to go to target. But they knew the news was coming. They thought, look, let's wait till the news, and then we'll go to target. Either way, it went to target. It's right there, you can see it. Either way, it went to target. We had prepared for this trade, guys. You remember, I said there were some Aussie trades coming. I've given two previous examples of what to expect given this trade on the Aussie dollar. You've seen those two setups. Here's the third Aussie trade, and here it is. It literally does go to target. Okay, and it's textbook. Okay, so we're going to accept that on that one. We took a loss. We're going to accept that and say, okay, we took a loss. We wasn't listening to FOMC statement, but here we go. Single line trend line break again. First fractal. I would be in below that fractal there, but it doesn't matter. First fractal pullback for entry at 50% fib. It didn't get there. We know on the way to the 618 that it's got past 100, so we re-enter there. And there we are, 97. If you got at the 1.5, 79, if you got at 90, 98 pips. Okay, you lost one, you made one. There's lots to be made in this trade. Either way, come on, guys. Textbook strategy. The more you do it, the more confidence, and that's what trading takes, confidence. The more confidence you will have in these setups. And those little nuances, I said it before, those little nuances like FOMC was coming, right? Expecting a stop run. Same with NFP, non-farm payroll. They're going to do a stop run up and down and all the rest of it. Yeah, those little nuances, you learn to overcome those and stick to your strategy. It works time and time and time again. Guys, not going to take too long on this video. Appreciate you guys listening in. It's textbook. It's in the book. When you get the book, you'll see that many of these trades just repeat themselves over and over and over again. And I look forward to hearing your comments in the trade group. And until then, thank you again. Cheers. Bye-bye.